2022, the stock market really had a tough start, didn't it? Today, I want to do a review for online brokers that is available for Aussie investors and see which one is the winner. Now, let's get into it. So first thing first, who are they? I would like to put them into three groups. The online brokerage platforms offered by the banks, independent online brokers, micro-investing oriented platforms. And today, I'm not going to include the micro-investing platforms as it's not really apple-to-apple comparison. I used to use Concept Pocket, but not anymore. And I personally haven't tried any other micro-investing platforms like Rates, Spaceship, or Sharesies, but I'm going to give it a go and maybe make a review video on them in a couple months or so. So here they are. We have 8 platforms that are associated with banks and 11 independent online brokers. Here are my criteria. It has to offer CHESS-sponsored shares. So this is the Australian share thing. CHESS-sponsored means your direct ownership of the shares is kept a record at ASX. If a broker offers CHESS-sponsored shares, you will be given an ID, and this number is called Holder Identification Number, HIN. It typically starts with an X, and your shares are attached to this number from this particular broker. To have CHESS-sponsored shares is very important for me for 2 reasons. CHESS-sponsored shares means that I own them directly and that I receive the dividends directly and I have the voting rights. And some other brokers, on the other hand, operate under a custodian model, aka they hold the shares on your behalf. So if those companies go under, the ownership of the shares is not clear. You may or may not get your shares back. As you own the shares, that you can move your shares from one broker to another. By getting the CHESS sponsor ticked, we have eliminated 3 platforms down: IG, Superhero, Interactive Brokers. Now, my second criterion is the fees. Nobody likes to pay high fees because it really can erode our long-term returns. It looks like all the banks trading platforms charge around $14, which is understandable. Bigger banks have more overheads, and the big 4 are all public companies, so they need to maximize the profits for their shareholders. How to? The commission from trading activities, the brokerage fees. Understood, but no thank you. We also cross out Saxo Capital Markets and Bell Direct. One of the reasons some investors would rather pay a higher brokerage fee to stay with the banks, especially the big 4, is they think that they're more legit and reliable. The truth is, they are all regulated by ASIC, Australian Securities and Investment Commission, and have to have an Australian Financial Services License, AFSL number. If any of them go bust, your shares are CHESS-sponsored and directly owned by you anyway. So your CHESS-sponsored shares are as safe as shares held with the banks. And next, in terms of if they provide a user-friendly interface and research data, I would say all of the apps are very easy to navigate. And some may look a little bit messy and traditional, and some may have trendy and minimalist style. In terms of the research data, I personally don't rely on the information given by the broker. The trading platforms are simply the place I buy and hold. You have Yahoo Finance or paid platforms like Morningstar Premium or Seeking Alpha if you want to dig into more comprehensive data. Now, we have 6 trading platforms which offer different types of investment products and have their specific target clients. Let's go through one by one. CMC has the longest history and it was founded in London in 1989. It's actually listed on London Stock Exchange and is part of the FTSE 250 index. Among all, it offers the most comprehensive products. You can do CFD trading, over 10,000 products. You can access both domestic and international stocks with over 35,000 shares. You can buy bonds on CMC as well. They currently offer 0 brokerage on US, UK, Canada, and Japan shares. For Australian local shares, 0 brokerage for trade below 1,000, limited to 1 order per stock per trading day. Also, CMC has advanced order types beyond market and limit orders. The new 0 brokerage fee for Aussie shares came less than a month after competitor Stake offers 0 trades for members who refer 3 friends. Speaking of Stake, it was the first share trading platform to offer US shares at 0 brokerage in 2017. Currently with 0 brokerage model for US stocks and $3 flat fee for ASX trades. And Stake is definitely one of the cheapest trading apps. One thing I like about Stake is that the interface is really neat and clean, and it tells me my average purchase cost of each stock on the platform. And next, Go Markets, Think Markets. And these 2 online brokerage platforms have strong emphasis on their CFD trading services, especially Go Markets, which was founded in Melbourne. Besides their CFD products, they are offering CHESS-sponsored shares and ETFs now. Go Markets offers 0 brokerage on the first 20 trades and only $7.70 flat fee per trade after that. over 2,500 ASX shares and ETFs. Think Markets offers CHESS-sponsored over 3,100 ASX and HEX shares with $8 per trade. Self-Wealth is a public listed company. You can trade Australian shares for $9.50 per trade flat and US shares per trade for $9.50 US per trade plus a 0.6% foreign exchange spread, as well as Hong Kong shares. Pearler is a new player in this space, which was founded in 2018 in Sydney. This platform definitely has a strong emphasis on investing for financial independence. You can access 2,000 ASX shares for $9.50 and 5,000 US shares for $6.50. The team is very creative and knows how to encourage people to join the platform. They have several campaigns like auto investing, prepaid credit for cheaper brokerage, friends referral programs, and I guess Self-Wealth has lost quite a few market shares from them. They also allow investors to follow some influencers' portfolios to see what they are investing, but I'm not sure if this would encourage the herding behaviors that investors should avoid. They also offer zero brokerage fees on limited ETFs that they collaborate with, which is a bonus for investors. Stake, Self-Wealth, Pearler are definitely beginner friendly. In terms of fees, Stake is definitely the cheapest, but if you need auto investing or simply would like to access brokerage-free ETFs, you may open an account on Pearler as well. Well, I didn't give you the answer to which platform is the best, right? Because different investors have different investing needs and preferences. I personally use CMC, Stake, and Pearler for different holdings, as well as Vanguard Personal Investor, which unfortunately is on custodian model. Let me know which trading platform is your favorite and share with us what do you like about it and what you don't like about it. Well, thank you so much for watching. My name's Irene. I'll see you next week. Bye.